are getting shredded. You know, where big funds think relative value is at. they're just destroying S&Ps and long end bonds. All bonds, you know, global bonds, not just U.S.
Well, the ECB wasn't as dovish as they wanted?
Correct. They didn't get anything near to what they wanted in terms of are they going to extend their QE program, and they also wanted they wanted the ECB to add things like you know, less qualified debt, less qualified corporate bonds, things like that.
And then that coupled with our Fed being more hawkish over the last 2 weeks than they were before that was a perfect storm for Friday, that the lower it went, the lower it was going to go.
Yeah, and it started Thursday, you know. I mean, and we had an opportunity to get in front of this and, you know, make some – I think it takes a couple of days for us smaller guys to realize what the funds are going to do. And then a lot of times it just turns around like it did yesterday. Even in bonds and S&Ps together, they rallied so much that now they're just taking that all back. It's really hard.
All right, so what we're going to do today, like last time Wojo was here was just 2 or 3 weeks ago, and he talked about showing just setting up some conditions for putting on a trade, and if it's an outright trade or not. Woj, if you could walk us through it and kind of show the simplicity of what we try to do, and guys could kind of also see where their overlaps are with yours. But take it away from there.
I'll do it in S&P since a lot of S&P guys are here. We'd have to go back. I don't really want to talk about if you guys can see my screens, then this is just a simple P&F chart. And it really helps me to identify where I want to either buy an outright or sell an outright. And a nice thing about that is these are the ultimate lows of last week. On this pink line here, nobody's going to pick this area to buy this market. I mean, I wouldn't have, and I wouldn't have recommended anybody else doing that just based on where we'd come from in price. But what the P&F chart does is it strips out time. You can see time at the bottom, but it's irrelevant. It's only going to show a time when price moves 3 or 4 ticks outside of its last higher low. And what I mean by that, let's go to an easier place to look at. I don't know if you guys can see these pink lines that I'm drawing on the horizon here, but
yeah, we could see them.
Okay, so this is something that I would be interested in looking at. If we weren't in such a volatile, chaotic, you know, short-term history, I would look at this price saying, okay, maybe we've got some. Let's say we didn't sell off 80 handles in the last 2 days, and S&Ps were in a downtrend. I would look at these tops here of 13 and a quarter. Let's just make it easy and say 13 even. You know, price is bouncing off 3 or 4 times with just where the X's are, and you can see that over here, the third time down. You know, you make a few ticks, then this breaks out, and the retracement continues of a downtrend. So the downtrend is now a failure, in my opinion, and I would start to look for areas to get long. And where I had the 13s at, 21.13, let's just put 13 and a half. 13 and a half is now kind of a support level for me, and I would hope that the price gets down into here at some point, and it doesn't. I mean, we're talking about some really extreme prices in the last couple of days, so these examples are bad. But these are the things that I'm looking at. And, you know, you get one shot that comes kind of close. This is the closest it gets in price, which is 15. So that's 2 handles away from where I want to buy it. So I can't do anything. If this were an example on a normal trading day, I wouldn't have been able to buy this at all. It just never gave me enough, how can I say, enough edge to say if I'm wrong. If I buy 15s and then they go to 13, which is my price that I want to buy, I'm just out 2 ticks or 2 handles. That's 8 ticks. So you got to wait and see what the continuation looks like. We still see, higher lows, or, prices continuously moving higher. And there really isn't a price anywhere in here that I could see a safe place for me to buy the S&Ps up until, you can't even consider this area right here an area to buy the S&P. It just doesn't get around enough old resistance, and the resistance area that I'm talking about here is, let's just say it's 29 or 30. Prices never even retrace that far. I'm always looking for a spot for prices to bounce off of. If we're in an uptrend, I'm going to buy it against old resistance. And this, in my opinion, because it traded up to and came off, let's just say 30s again, several times. I mean, these are hours in here. If you take a look at a chart, this is to be exact, that's your time frame. That's 10 o'clock on the 12th. So you can look at that and say, how many times did price bounce off of there until it broke out in the area of 1035. So what happens after that is, we just keep rallying, and now we're, this is the price where I would consider the uptrend over, is when you get kind of a nice retracement back into here, and it just continuously fails to go higher. Now you're on the sell side, and it's just really choppy, bad price action. You're not getting a lot of good setups and conditions. When the S&Ps were in their low volatile range for, I don't know, how many weeks was that? All of August, a lot of July.
Most of the summer after Brexit.
This is what it looked like. I mean, this is still in September. Is it going to let me go back? Because see, this is the kind of range that you guys were trading the S&Ps in for a long time. I mean, this to me, there isn't a lot of opportunity, but you can see where you guys would want to be buying and selling at. It's just so choppy that it gives you, choppy in a bad way, I say non-directional. And if you're waiting for breakouts and setups for breakouts, you're just not getting it. And it was weeks and weeks of that, and I kept referring to, good places to just trade the channel. There's even here, I mean, it looks not as opportunistic as it does in the let's say the 10-year market, but at least it kind of gets you from buying these prices, say up here, if the market you think is breaking out, you might not want to buy those prices.
You almost you gotta be willing to miss the breakout and buy it back towards where it broke out. You just gotta wait especially on really slow periods like we were in for July and August. You can't look for breakouts. You got to let it happen, and then use your mantra of old resistance is new support. So what Wojo's saying is, when we're rallying, you're either seeing resistance getting made and then taken out, and he's looking to buy it back to where the resistance was made or where they penetrated it on an uptrend. He's looking for pullbacks to what was resistance, then that resistance failed.
Right. This is a chart of the 10-year market, which is something that I trade a lot of, and this is a month-long chart, or how long is this? 2 weeks. I had it shrunk down even a little more. I can't shrink it down anymore. So this is just a nice example of what Anthony was talking about, is old support holds in every price point here. Um, if I'm trading during the day, I can't expect too much from this market. I have to wait for good spots. These look like prices that you might want to sell in here just because you hope that the continuation lower happens. And I'm the guy that's saying, I don't think it's gonna, and you're going to have to prove me wrong. I'm willing to buy these prices, staggered buying, I'll tier it. I'll buy a 1 lot, a 3 lot, a 5 lot, etc. up until this price, and if it goes below 27, 26, 25, I'm puking it. It makes my job a lot easier to know I'm waiting for these prices and I'm going to puke it if it goes below there. Here, for an example, today, I was getting long extremely heavy in this price here, 15. I do this, I hope it doesn't, there it goes. So what I did today, we had a breakout yesterday. This is today. We retraced up until these old resistance levels of the last 2 days, so Friday and Thursday. When it got down to here, I bought it here, made a few ticks, and then I bought it again, and I held on to it for way too long because I was thinking, okay, where is the exact price of, this old resistance? And I was thinking I was going to split the difference between this low here, which is 11.5, and 15. And that's what I did. I split. I should have just kind of puked it. As soon as it started to trade into the 12.5 area, I should have just dumped it. And that's where I was still buying it. And that was just a terrible idea. As you can see, price not only retraced the entire move of this old support, is what I'm calling it now. It broke through it at 5.5. So, I mean, you just have to stick to your guns. You have to stick to a game plan. You can't think that one guy is smarter than the market, because if the market's going to go someplace, it's going to go, and it doesn't care about technical analysis, fundamental analysis. You have to stick to your puke points and your entry prices as well.
Well, what's interesting is that you don't get in unless you know where you're getting out for a loser first. Is that fair to say?
Absolutely. I know two things: where I'm going to buy it. If the price doesn't hit my bid, I don't pay up. I'm staggered enough to where I'm going to say I'm at least going to get a little something. If it comes down to 15, 130, 15, I should get at least a 1 or a 2 lot.
Now he's talking the 10 years. He's not talking the S&P when he's bidding.
Right. This is a 10-year chart.
Because you might pay up in the S&Ps. You might pay up if you're trading that as an outright, because it's a lot thinner than the right, or even so, you might not.
Well, again, let's use this as an example of price in the S&P. If this is 15 was the price, maybe I pay 15.5 for something 15, 14.5 for a few more. You can't be perfect, but what you don't want to do is pay. You don't want to buy too many. So if you can only afford to buy a 2 lot, then you pick your prices that you want to buy, and say 15.5 and 14.5. You got 1 and 1. That's your average of 15. And that's it. You're done. If you want to shoot your lot at 15 and buy a 2 lot, that's fine as well. But all I'm trying to say is it's not an exact thing with the PNF, but it's given me an idea of where I want price to come down to before I initiate or get active. And yeah, I mean, the last thing I want is to have a full package on and praying that I'm right. I'd rather have half my load on and be right. You know what I mean? Does that make sense?
Yeah, because you're more.
It gives me a lot more comfort to have sit in a trade for 10, 15 minutes with only, let's say, if I'm trying to buy 10 maximum. If I got 6 on, well, that's great. I feel real comfortable holding on to that.
Well, and you're more objective.
Well, I've been right for a little bit. Well, I've been right for a little bit. You know what I mean? It's given me It's given me the sense of, okay, you're not getting prices that are lower, and you can breathe a little bit. There's nothing worse than having, okay, I have my maximum position on, and it's offered. Now I'm sweating. I'm thinking, if this goes down another tick, I got to puke 10 cars, 10 contracts.
Yeah, and you're going to say, I wish I would have got in where I puked them.
Unless it keeps going lower. But that's the way I trade every time. You know, if you want to look at, let's take a look.
Real quick, I have a question. These P&Fs, so everybody knows, these are the same as the ones we use, only X's are the up rotation and the O's are the down rotation. It's not the footprint and the contracts that are trading in each. But the rotations are the same. But what's the number for your P&F for this particular chart, Woj?
3.
Oh, this is only a 3?
Yeah, 3 by 3.
But this is a 10-year note, right?
Right.
So it won't form another bar until it rallies 3 off the low or breaks 3 off the high.
Right.
Okay. 3 full ticks or the 3 halves? Like
halves.
Halves. All right.
So you guys would be quarters, right?
Yeah, I use a 4 P&F for which would give me a lot more bars than you have, because they're going to rally and break 4 ticks, which is 1 point all day long, than the notes would. But if you go to a 6 P&F for the ES, you kind of take a helicopter view of what's going on. And he's looking for clusters, and he's looking for resistance and support. And when it fails, looking to try to buy a rotation back down to it.
Right.
And the whole rationale, because one of the classes that we've done and we've talked over and over again, is the rationale of why that would work is the whole this baby bird story is what I say, is that you get the when resistance is working great, when it fails, all right, and they run up through resistance, you get a lot of people who are stuck short saying, damn it, I wish I wasn't short anymore. And you get a lot of people that wish they were long, and they try to bid it back down into consolidation too deep, so the market rotates close to where resistance failed, and you've got all those helpless baby birds, the shorts that are stuck, trying to bid to get out where they wish they would have got out the first time, and they don't. And that's the reason why it normally would hold there, is because they're all resting bids for the most part, and they're short, which means they have to buy it at some point. And if they don't get filled and it starts to rotate back up, they're the buyers that run it on the continuation.
Up even higher.
Yeah. They're the ones that make your profits. That's the whole adage where when you think about trading, and you probably thought about this a long time ago, I thought about this a long time ago, and it made me think of, why would someone come in after me and buy it at a higher price? Because that's what makes a profitable long trade profitable, right? You buy it at 2. Someone has to come in and try to buy it at 3, 4, 5, and 6 for me to sell it at 7 and make 5 ticks, right? Well, the people that are buying it after you and at higher prices are the ones that are probably short and have to buy it, and they chase it. And the emotion makes them just pay up for what they perceived as value. Because, listen, I got news for you. Every tick higher is more expensive for someone who's short. I don't care where you're short from. It's getting more expensive when you're short and the damn thing is rallying 1 more tick higher and 1 more tick higher. 4s are more expensive than 3s. 5s are more than 4s. 6s are more than 5s. And finally you say, the hell with it. I'll buy 6s to get out because I'm a dumbass and I should have bought 3s, but I let them squirt to 5 and I'll just buy it at 6. See it go to trade 7 and back to 3, and I really feel like a jerk, but it's because you suck. Not you, but the guy that was short and couldn't get out. And that's the market. And if you could hear the dummies trade, that's what they're doing, right? It's like, I should have bought 3s. I should have covered my short from 1 at 3. Now it's 4 bid. Now it's 5 bid. 6 bid. I'm out at 7. 3 offer. when you trade like crap and I trade like crap, we're doing that, right?
Yeah.
And that'll happen. You'll get into that rut. Or you just buy 7s 3 offer, and it's like, are you kidding me? Who's got a camera on me? And that's the way it feels. And that's usually when you're a personal fast market and you're really, if you know what you're doing and you're not trading good, you're in a personal fast market, you're forcing, you're anxious, there's nothing going on, and you're trying to make what you make when it's real busy. And the market's just not giving you that. That's when I trade bad. And I would imagine that's when you trade bad, right? When you're trying to force volatility.
Yeah, you're not waiting for your price, and you think you're seeing something in the market, and the next thing you know, you get it. You know, you're involved, and you're getting chopped up.
What were you going to show? You rotated this chart back, I think, to show something, and then I interrupted you.
No, that's it. I just wanted to see where things were at and how bad things are for me.
You're not long the 15. Was that a spread when you were buying the 15s, or you just buying
No, those were outrights, and now I'm in some bad spreads.
And you'll wait till 2, or what's your plan?
I'm going to wait until after this. We have a 30-year auction.
Oh, that's right, at noon. Why are they on a Tuesday, Monday, Tuesday? They're usually
I don't know. They did 2 auctions yesterday. They did a 3-year and a 10-year. I don't think I've ever seen that before.
I've never seen an auction on a Monday. They're always Tuesday, Wednesday, Thursday. They're spread out. I don't know. And then 2 on the same day. You're right. I never noticed them scheduling it on a Monday and then scheduling 2 expirations on the same day and same time. Was it the same time? Were they both at noon?
Yeah, I think so.
What was the one question I was going to ask? Oh, you know a pro, and I tell people this, like the trading room that I host is separate than this room. These guys and girls are more astute and obviously much further along than guys that just might be in the trading room, right? And the trading room, Woj, and I didn't know this years ago, and you probably don't know this, but a lot of trading rooms are trade call rooms where they'll give you stocks to buy, right? Or they'll hold your hand and tell you when to buy, where to buy, when to get out. And everybody complains about those because it doesn't work. That's not a skill. You're not developing a skill when you're trying to piggyback someone. We never piggybacked anyone else in the office, right? And you don't either in the office you're in now. You might be in similar positions in spreads as other traders, but you're not doing the exact same thing as a guy next to you or a guy down the hall, right? Or a guy down the row. So
Right.
The point I'm trying to make is we could see your screens, just so you know.
Oh, all right.
But what was I going to say? Oh, a pro is someone that will talk about his losers before his winners. Period. So when you're introduced to someone and all they're telling you is how many winning trades they had today, how great they did today. Do you remember in the break room, Woj, and in the bathroom? Not that we had meetings in the bathroom. You'd always go to the bathroom and say to us, how you doing? And nobody would ever say, I killed it today. Right? And
Right.
what would you say? Talk about where you screwed up.
Yeah, I don't care about how much money you made. I mean, that's really not important. It's how did you make money, and if you lost money, what were you doing? I mean, it's a 2-cycle thing. I mean, if you made a bunch of money, I mean, okay, did you get lucky and walk away from your screens while the market was tanking and you came back and it was 4 or 5 handles higher? I mean, that's not good trading. That I don't care about those those trades. If you found something in the market like a repeating pattern, or you're finding good support levels to buy in an uptrend, I mean, talk to me, because if I'm getting killed, I'd really like to know about it. Maybe it slows me down.
Or a leader. You got a
gets me
leader?
on the idea. Right. If there's an ancillary market, what are you looking at? Is it oil leading today? Because I'm looking at the pound, and it's not working.
I'm looking at the pound and I'm getting my ass kicked.
Right. Yeah, I don't. When I'm losing, the last thing I want to hear is everybody else getting killed as well, because I know there's guys making money, and when you're in a trading shop, like, when you're in a proprietary trading shop or firm, a lot of guys are kind of skeptical to tell you that they're doing well when they know you got run over. So they tell you, yeah, markets are tough, blah blah blah. Yeah, they don't want to tell you what they're doing right, because they don't want to sound, like they're bragging, or they know something that you should know. And I understand that. But what you get here is you get to hear other people's point of view of what really is making money. And if you are making money, I mean, you should tell people about it. I mean, that's what you're in here to kind of support everybody. Not only yourself, you're going to need it yourself at some point.
It's going to set you back, and you're not giving a secret out. You're not.
Right. There's no secrets. I've been in 3 or 4 different trading firms over the last 20 years, and there isn't one that has a secret. So, voice your opinion. Tell people what you're doing well, and if you're losing money, I mean, talk about that. That in Anthony's trading rooms that we talk about during the week, is the first thing you do is you have to go over your losers and figure out where your spots are that you're not making any money on. And if you can't identify why you're losing money, and you got to stop trading until you get help, or the market changes a little bit, so you can identify a different pattern for yourself.
The one thing that you keep,
not going to stop.
The market's not what?
The market's not going to stop. I mean, it's going to keep doing what it needs to do, and it'll shake you out. You'll be out of a job.
It's like
if you
life.
Don't figure out where you're losing money at.
It's like life. Life will put you where you belong. Meaning, if you live in people from all over the country and the world, so $1 million house in the western suburbs, and here it could be a $300,000 house in a suburb in Indianapolis. I hate this state, Illinois. It sucks. But anyhow, my point is if you drive a nice car, or if you don't drive a nice car, at some point life puts you where you belong. You didn't make the right decisions to get successful. You didn't work hard, you didn't do something. But life has a way to put you in the house you belong in, square footage-wise, cars that you drive, clothes that you wear. Life has a way of putting you where you belong at some point. Yeah, there's some good breaks and tough breaks, but at some point, life shakes you out where you belong. If you're skilled at trading, you have a long career. If you're just lucky, you'll have a short career. If you're, the market puts you where you belong. Period. I got it. Could you answer a question or two before this auction? Then I'll let you go. Well,
yeah, that sounds good. So I'm gonna have to watch this. I got some stuff on.
What's your advice for managing and improving your emotional management?
You have to identify where your entries and exits are before you get in. Consider you're a robot, or you're on a trading program. Let's say you're in an algorithm. You have to think like that. If you identify an entry spot that's a repeating entry spot that you like to buy or sell, and you stick to that, and if the market gets bad or goes against you, it's not an emotional thing to just say, okay, this is where I got to get out. You take emotion out of it. The market is going to do whatever it wants to. You're not right or wrong. I don't want to say it like that, but
don't take it personally.
You can't take it personally. It's going to do what it needs to do. And what you're doing is you're salvaging, a loser quickly, and then you move on. And then you have to take whatever conditions that you have, and you have to wait for those conditions to come back. You can't make an immediate trade. Say you buy 10s, and your puke point is 7s. You buy 10s, you sell 7s, And market goes back to 10. You're like, oh, I'm going to buy those again. Guess what? You're going to be puking 7s again. You have to wait and say, okay, are 7s a buy? Are 5s a buy? Are we in a downtrend now that, I can see a repeating pattern of, market was bouncing off 10s. Now they're selling 7s. Is 10s a place to sell and 7s to buy? You know what I mean? You have to wait and identify your entry and exit prices. And if you get emotional because you're having too many losers in a row, then you're not identifying, where your entry prices are supposed to be.
You're doing something outside your setup, most likely.
Right, because your setup is supposed to be identified before you get into a trade.
Here's what that was wonderfully said, by the way, and I'm going to add one thing to it. Have a plan after your plan, meaning you better have a trade after your losing trade. So your losing trade should have been part of a plan, but you better have an effing plan after that losing trade, because if you don't, then you're going to probably repeat that losing trade just to get it back, or at least your mind is going to want to do that. So you have to have a plan after your plan. And your plan after your plan should be consistent with what your plan was, meaning a setup after your setup is the point I'm trying to make. So in Wojo's scenario was he bought 10s, or you buy 10s and you sell 3s, you lost 3 ticks. If you don't have a plan after your plan, you're going to probably try to buy 10s and sell 7s again. Now you're really pissed. Now we don't know what you're going to do. You're probably, if you're like me or Woj, you're going to break something. Now, that's my next plan. So you got to have a plan after your losing trade plan. It's easy to say, man, I'm pretty objective today. I've had 8 winners and 8 trades. Yeah, no kidding. Great. If you were consistent with your setup, you had a great day. If you weren't and you got lucky, like Woj alluded to earlier, maybe you made money and had a crappy day. That's why you got to criticize your winning days, because sometimes they weren't good trading. It's going to come back and bite you. The market's going to get you. It's not personal, but it's going to put you where you belong. So if you're making money because you got lucky, you will give it all back and then some. Trust me. But if you're making money because you got skill at valuing price and you're consistent with what you're doing, it will reward you. It will reward you, because most people aren't skilled, most people aren't consistent, most people aren't disciplined, most people don't have a plan after they have a losing trade. You know what their plan is after a losing trade? Anxiety. That's their plan. Emotion.
Yeah.
You want to manage your emotion? Manage your setups.
Yeah, a lot of people force it after a losing trade, and that's emotional. And that's telling you right there, if you're pissed off and you're going to make another trade, you don't have a game plan, and you shouldn't trade. I mean, it's that simple. What happened to me last night is I had some really good ideas. I wait for my prices, and I made a bunch of money last night. This morning, market started to sell off, and the market got away from me, and I didn't execute my my pukes fast enough, and I gave most of it back. I'm not pissed off. I know where I should have, gotten out, so I'm waiting now. I have some positions on that are separate than outright, so they're fine. But the outright trades that I executed after 8:30, 9:30, cost me my whole night that I worked really hard at and was really patient at. So I know what I did wrong, and I'm the one telling you guys what not to do. So it's going to happen. I'm not perfect, and my point is,
go ahead.
My point is that even though I know what I'm supposed to do, at least I know when I make mistakes, I know how to get back on track. That's really important.
You again, that's beautifully said. And the thing that I would add to that is the same thing of when you point the finger at yourself, you actually get less mad. When you blame someone or something else, that's when emotion gets away from you. I don't care if it's in a argument with your spouse or your kids or the clerk at the store. If you could blame someone else, you're going to get more mad. But if you're professional enough to say, I screwed up, I gave back my day because I was not quick on the trigger to execute my stops, his mental stops, so he lost a little bit more on his losers than he should have. He's not going to be happy, but he's going to be a lot less mad if he would have said, this market sucks. They do this to me every time. Think of how mad you're going to get. You got someone to blame. If you got someone to blame, you got someone to beat up. And you gotta be in the mirror a lot in this business. In any business. You're running your own business. And so if you're running a business, you got people working for you, the buck has to stop at your desk. You could blame your employees, but at some point, you should have fired maybe a couple of them 2 years ago. That's your fault. So, those are good answers, Wojo. We'll let you go so you can prepare for this auction. I recorded this, but I'll need a day, not this afternoon, to get it laid back up. So you guys watching live, be patient. Tomorrow it should be up, or it will be up. This was a good session, and it was simple. Looking at a P&F, old resistance to buy as new support on an uptrend. Trying just to be simple, and that's what he likes and that's your wheelhouse, right?
Right, and just if markets weren't so friggin' volatile right now, I'll tell you what, sevens, I would be selling this market between 5 and, not 10, I don't want to go that far up, but right there, 8.5 to 5 is where I would start selling this market. Because this support in here from 5 to 7, 5 to 8.5 was old support. So now I'm looking at this breakout through the lows as new resistance, and I'll be tentative to get short here. Instead of maybe selling 10, maybe I'll get short 5, just because we sold off so hard over the last couple days. But my example is that in itself. I will get short 5s through 8.5.
And you guys that are looking at this P&F, this is not much different than the lines in the sand phrase that I give our lines in the sand. I mean, I pretty much take the middle of a consolidation, a rectangle box, on a P&F, 6 P&F for the S&Ps, Woj, and I'll take the middle of that box, and that's a line in the sand.
Right. I mean, you guys can watch this and see if it works out for me. I mean, you'll know what happens after, if it's trading 15 again, I'm short and I'm losing money, or I'm short and I puked it.
What if the auction though is bullish though? You won't try to. Will you still try to sell it?
I'm not going to do anything in front of the. I'm not going to do any outrights in front of the auction. So I was just using that example. On any given day, that's what I would be doing.
Because auctions,
there's a number coming out, and it can create a lot of volatility. So I'll stay away from this market until after the auction.
Auctions for treasuries are like, they're like unemployments for all markets. They could be, they could miss, they could have to reprice the outrights accordingly. So your support resistance you throw right out the window, and sometimes you could just jump and buy it, right? Will you ever trade outrights on the auctions? Like just going.
I'll fade moves based on the merit of the auction. Like if it's there's a couple components to it, just like unemployment. So if one of those components is like a second tiered component, if they run the market up based on that, that number, say it's not payroll, say it's the unemployment number itself. Right. If payrolls came in on the screws and unemployment was, 2 bips lower or higher, and they move S&Ps off that, I'd look to fade it. That's how I look to trade these numbers. I want to catch people off guard.
Part of the auction is bullish and they rally it, but the other part is kind of bearish, so you could fade into that spike.
Right.
And they'll come off. You caught them expensive. That's all. Fades are your best trades like that, but what's important about fades is, especially in a spike and after numbers, they got to work quick for you. You don't want to be fading a spike and have it sit there.
No, it has to be instant.
Yeah, then it's like you're in the room with a bunch of guys looking at each other, waiting for the first jerk to exit. Right? You can't. That's the way I look at it. It's like
right.
A 5-point rally, and the son of a bitch will come off, and you're like, all right, he's looking at me, I'm looking at him, and we're looking at the door. And then you get a lot of people that do that, and it runs another 5 points higher, and it really is a bullish number, and it's just like instant satisfaction. There's nothing better, There's nothing better than when you go up at the bar and you say, "Can I buy you a drink?" And she says, "Here's my number." You don't even have to buy her a drink. She goes, "I'll buy you a drink, and here's my number. Nice to meet you."
Then she writes her name's Mike.
Let's wrap it up on. Oh, wait, I thought I was on mute. All right, I'm going to stop the recording for guys watching in the future.